Hi everyone, my name is Martin Köring. I lead the Sustainability, Climate Change and Natural Resources practice at the Economist Intelligence Unit. Welcome to our presentation today on our new exciting study on resetting the agenda, how ESG is shaping our future, sponsored by UBS. I'm joined today by my colleague Candice de Montpetit, who is Senior Financial Services Editor at the EIU. So let's now look at the agenda for today. So first of all, we are going to look at the key findings from the study, and then the study itself, who we surveyed, the key components of the study, and then we will look at the integration of ESG factors as one of the main parts of our study. And of course, we'll also look at the main drivers and themes that we uncovered in our study and the survey. And then we will look at the standards, frameworks, and benchmarks identified in our study. And finally, we will provide an outlook and key conclusions. Then just in terms of the study itself, so to understand the ongoing shift of environmental governance and social factors from risk to opportunity within the investment space and how this is impacting processes and strategies, the Economist Intelligence Unit surveyed 450 institutional investors working in asset and wealth management firms, corporate pension funds, endowment funds, family offices, government agencies, hedge funds and insurance companies, pension funds, sovereign wealth funds, and also reinsurers across North America, Europe, and Asia Pacific. And findings from the survey were then summarized in a white paper and infographic sponsored by UBS, Resetting the Agenda, which also included insights from 13 expert interviews. So here you can see a list of the names of the 13 experts we interviewed for the study, representing a wide range as well as depth of knowledge from the Carbon Tracker Initiative and the UN Principles for Responsible Investment to major insurers and pension funds. So then just in terms of the key findings from the study, we find the perception changing. So see this movement, the shift from risk management and diversification to SDGs, to the Sustainable Development Goals and the post-pandemic recovery. And then in terms of the themes, we see this focus now on environmental themes in particular, renewable energy, climate themes, water pollution. And then, of course, the need for common standards has also been identified in our study. We have reviewed the traditional use of ESG, risk management. Now we will find that there are new opportunities in ESG investments offer in the post-pandemic world. We'll now delve deeper into the detailed findings of the study, starting with what our study revealed about ESG integration. So here we can see a quote that summarizes nicely this first part of our study. And this quote is by Anne Simpson, the Managing Investment Director, Board Governance and Sustainability at CalPERS. And she really highlights the focus on fiduciary duty, but also that ESG is really also about the fundamental platform for all activities. Let's now look at what our study revealed about ESG integration. Candice?
Hello, everyone. We're very happy to be presenting the findings of our study today. And the first of which will come as no surprise if you work in investment management. And it's a fact that integration of ESG factors into investment processes has really taken off. In fact, it has become mainstream. A decade ago, ESG integration was more or less limited to niche products such as SRI funds that usually catered to a specific ethical-minded group of investors. But as investors have realized that these factors presented actual risks for their investments, more and more have made the move to integrate them to their investment processes. So now integration is now more or less established, but it's continuing to grow as we see here. We've asked respondents which percentage of their assets under management integrated ESG factors. And our study shows that during the 3 years prior to 2020, the share of investors that integrated at least a quarter of their AUM was 63%. And this figure increases to 66% of investors that are planning to do so over the next 12 months. So still a sort of steady increase. A bit more surprisingly, we can see that North American investors appear to be slightly ahead of their counterparts in other regions. When you look at the share of investors that integrate ESG into at least half of their AUM, in the US and in Canada, it's 41%, and that compares to a quarter in Asia Pacific and just 18% in Europe. So now if we look at the individual factors, with the recent focus on climate disclosure and the push for greater board diversity, for example, we expected that the E and the G would prevail, would be on top in terms of importance. But in fact, our study finds that the individual E, S, and G factors are viewed as equally important for investment decisions. So we can assume that the pandemic has put a greater emphasis on the S, but more on that later. Now let's have a look at ESG in the different asset classes. So here again, we had a bit of surprise with the first reporting frameworks, for example, the GRI, which was created in '97 to help companies report on non-financial performance. We had more or less expected that the listed equities would be way above the rest when it came to integration. However, we found that ESG integration concerns virtually all asset classes. So this shows there's a great opportunity across all these asset classes. For example, at least 30% of respondents use ESG factors across all asset classes, and that includes commodities, private debt, and alternatives. And for the top 3 asset classes, you have listed equities, fixed income, and real estate and REITs. The level of integration is around 40%, so that's pretty high.
Thanks a lot, Candice. And now let's look at the main drivers and themes that investors are interested in. So again, we'll start here with the quote that highlights, what is happening in terms of drivers and themes. And this quote by Bruno Servant, the CEO at Generali Insurance Asset Management, really highlights this dependence on opportunities, but also the need to measure impact. It's that impact that is increasingly important. Candice will now look in more depth at the survey results in the area of drivers and themes.
So when we look at the drivers, our study clearly shows that there's a shift post-pandemic. Prior to COVID, investors used ESG mainly to better manage risks and also to diversify their investments. But we can see that post-COVID, there's a change. The perception and use of ESG is shifting. And we've seen that the risk element is now well understood with ESG risk integrated into the investment factors and the investment processes. But now ESG is moving beyond risk to be considered as an actual driver of opportunity and growth. And this is reflected in our survey results. Over the next 12 months, for example, the main drivers for integrating ESG are to mitigate the downturn generated by COVID, and also a more impact focus driver, which is fulfilling the UN SDGs. So clearly here, we can see that impact investing is the next frontier in ESG, and investors are turning to the SDGs as a guiding framework, as we'll see on the next slide. So indeed, our study finds that nearly 3/4 of investors agree that the SDGs are the main guiding framework when it comes to impact investing. And this is most keenly felt in North America. And we think it's most likely linked to the fact that the Biden administration has pledged to re-engage in international systems and standards. So this again shows a shift in mindset within sustainable investing. ESG used to be mostly about managing and mitigating risks. And now the concept is more closely linked to achieving positive outcomes. But now maybe let's have a look at just how well these ESG investments have fared. Well, our research finds that they've actually fared pretty well, and that ESG investments have proved resilient during the COVID-19 crisis. More than 7 in 10 respondents agree that their investments integrating ESG factors have indeed performed better financially than traditional equivalent investments, and that's both before and after the COVID pandemic struck. So this clearly confirms findings from numerous studies. There was notably a study by NYU that did a meta-analysis of 1,000 studies on the subject, and that highlighted the correlation between investments in companies with strong ESG ratings and superior financial performance. And as you can see on this chart here, the view is more strongly held in North America, where 81% of respondents agree with the statement above. Historically, the US had been slightly lagging when it came to the adoption of ESG, but the COVID crisis has clearly generated a mass awareness about ESG, both on an institutional level, but also within the retail investor space, with all these people coming online to invest. They're saying, we want to be part of this sustainable recovery. And this drove massive inflows into these green sectors. And in turn, these sectors have benefited from monetary policies and also the election of Joe Biden, who made the US rejoin the Paris Agreement. So now let's have a look at the themes that investors are interested in. Of the top 5 investment themes that are favored by investors, we can see that 4 are related to the environment. So these are renewable energy and energy efficiency, climate change adaptation and mitigation, pollution prevention and control, and also sustainable water and wastewater management. Also interestingly here on the list, you can see that number 2 is cybersecurity. And cybersecurity is a theme that's related to important social aspects, such as employee or customer well-being, also data privacy. And this clearly shows that the new emphasis that's on the social element post-pandemic. Also, cybersecurity and data privacy is the top choice in Europe at 38%. And that's most likely due to the fact that there's heightened scrutiny around data protection with the GDPR legislation, for example. In the US as well, interesting to note that sustainable agriculture and food security rank second, as the country seeks to build resilience in food supply. And then finally, perhaps a bit disappointingly, we can see that the theme related to gender diversity and women empowerment, its score is pretty low across the board. It's here the least selected option on the list. However, this may be due to the fact that on a practical level, it's maybe slightly less of an investable theme, because there are only few funds that invest, for example, in women in leadership. Hopefully there'll be more in the future.
So let's now move on to the topic we heard earlier about. This is how important it is to measure impact to make the most of the new ESG opportunities and themes. And of course, metrics and data are crucial for standards and benchmarks, also a key topic of our study. So here we can see an insight from an interview we conducted for the study, and this is by Joel Posters, the head of investment stewardship and ESG at the Future Fund. And this quote really highlights the importance of having one standard, to consolidate, to create simplicity and focus. Candice will now highlight some of our key findings on standards and benchmarks.
Yes, there's clearly a need for more transparency and common standards when it comes to ESG. We asked respondents to rank the biggest obstacles to ESG, and we found that the lack of clarity around standards, taxonomy, and metrics is the top obstacle for investors both in North America and in Asia. In Europe, investors are more concerned about the cost elements, so the costs associated with ESG integration, And we analyze that might be due to the increased tax and regulatory burden that these European companies and investors bear already. There's also a global concern about ESG ratings, which are viewed as inconsistent. And also internally, there's a concern about the lack of awareness around the actual benefits of ESG. And so speaking of standards, there are some common standards in ESG that are emerging, but they're yet to be widely adopted. As you can see here, we have two standards that are frameworks that are above the rest. It's SASB, the Sustainability Accounting Standards Board, and TCFD, the Task Force on Climate-Related Financial Disclosures. And they're the two most followed frameworks. However, while they're on the top of the list, they're only used by a third of investors, so that's still relatively low. Also, a bit surprisingly, the GRI, which we mentioned earlier, is a pioneer framework, and it ranks only 9th on the list. So there's clear need for these comparable metrics to boost transparency and trust and accountability in order for this to direct the capital that's needed into these ESG themed investments. But so there are some frameworks, but how actually how confident are investors in using them? Well, they seem pretty confident. In fact, 8 in 10 investors agree that the frameworks they use are fit for purpose. However, 7 in 10 also find that there are, in fact, too many frameworks. So they work well, but there are too many. The good news here is that there's clearly a regulatory push for common standards. In the EU, for example, you have this new taxonomy. You have the SFDR, which is the Sustainable Finance Disclosure Regulation, which imposes mandatory ESG disclosure obligations for asset managers. And in the US, the SEC is focusing on mandatory climate disclosure for listed companies. So those are all great first steps on a regional level. On a global level, there were also talks in September 2020 at the World Economic Forum's Sustainable Development Impact Summit, and that led to the publishing of 21 core ESG metrics. So these are all promising measures when it comes to establishing common standards. So now we'll move on to benchmarks, which are another tool that's helping investors. So investors are using ESG benchmarks to support their investment decisions, and nearly 8 in 10 agree that these benchmarks are useful. It's the environment-related ones that are the most used, followed by the social-related ones and the governance-related ones. Also, the most commonly used providers are Bloomberg and Dow Jones, although in Europe, Nasdaq OMX ranks second.
Thanks a lot, Candice. We'll now summarize the key findings and provide an outlook. So here again is an insight from an interview we conducted for the study, and that really highlights that the pandemic has shown the possibilities, innovation and scale-up opportunities when capital is allocated well. This quote is from Anne-Marie O'Connor, the head of responsible investment, Guardians of New Zealand superannuation. And then just in terms of just highlighting again, there's clearly a shift in perception from risk to opportunity. Integration is more mainstream to manage related risks, and of course ESG integration has proved its purpose when it comes to financial performance. But new themes are emerging, as we have highlighted, in the renewable energy space, for example, water, resilience more broadly. This was revealed with the innovation unleashed during the pandemic, and of course the greater awareness for the need for stronger resilience. COVID has really been a wake-up call that stronger resilience is required. More and more funds are pouring into ESG as the opportunity is growing, as we have highlighted. There's a belief that COVID-19 will accelerate the shift towards ESG, and sustainable investing will be a key driver of performance in future. And we see this in our survey results as well. I mean, nearly 3/4 of investors, 73%, agree that the COVID-19 pandemic is accelerating inflows into sustainable investments. And larger investors in particular see this acceleration in sustainable investments. So now, just in terms of summarizing again the 3 key takeaways. So of course, we have seen this perception changing from risk management and diversification towards the SDGs and the recovery. And then the themes are very much focused on environmental topics, renewable energy, climate themes, and common standards are needed to accelerate this trend. The trend is here to stay post-COVID, and however, there are still barriers, and particularly the need for more transparency and common standards. You can read the full study results on the EIU Perspectives and UBS websites. Thank you very much.
Thank you.